Stock market is shaking. Global economy secret game? What the IMF just said. Must know. The stock market is shaking. But why? Today, a silent storm is sweeping across the global economy, and almost no one is talking about it. Behind closed doors, central banks are panicking. Billionaires are moving their money. And just this week, the IMF dropped a warning that could change everything. This isn't just about stocks going up or down. This is about a global shift, happening quietly, strategically, and dangerously fast. What's really behind the market's tremors? What secret moves are world powers making while the average investor sleeps? And more importantly, what did the International Monetary Fund just reveal that could shake your financial future? What did the IMF say that could shake your financial future? Today we're diving into what the IMF, the International Monetary Fund, has recently said, and why their statement could directly impact your wallet, your job, and your investment plans. The IMF's warning. The IMF recently released a report warning that the global economy is slowly heading into a slow-motion storm. Major economies like the United States, the European Union, and even China are experiencing synchronized slowdowns. Behind this are rising interest rates, geopolitical tensions, such as the war in Ukraine and unrest in the Middle East, and disruptions in global supply chains. For developing countries, the IMF says the road ahead could be even tougher. Foreign debt is rising, currency reserves are shrinking, and local currencies are devaluing. This could force governments to cut subsidies, increase taxes, and impose austerity, directly impacting everyday people. In countries like Bangladesh, this might mean rising costs of electricity, gas, and even basic food items. Is an invisible hand manipulating the world economy? As we step into the second quarter of 2025, the signs are everywhere. The dollar is weakening, the euro is staggering, and Asian markets are trembling in fear. Investors are confused, corporate giants are suddenly reporting unexpected losses, and the big question looms. Is this just a result of tariffs and inflation, or is there a deeper strategic game underway? According to research from Oxford and Cambridge universities, we are entering a new economic era where technology, geopolitics, and information warfare are shaking the financial foundation like never before. From the rise of AI and automation to escalating global conflicts and the declining dominance of the dollar, the future of your investment may be hanging in the balance. 7 out of the world's top 10 stock markets are showing signs of severe instability, a scenario experts say is the most alarming since the 2008 crisis. In this chaos, alternative currencies and decentralized finance are starting to gain new momentum, potentially shifting the global balance of power. Really pulling the strings behind global market trends. What Oxford's research reveals that mainstream media won't tell you. Think global markets are just about supply and demand? Think again. Today, we pull back the curtain to reveal the real forces driving market trends, those who operate behind the scenes, beyond public view. And we're diving into Oxford University research that exposes truths mainstream media conveniently ignores. A groundbreaking study by researchers at Oxford and the Swiss Federal Institute in 2011 revealed something staggering. Out of 43,000 transnational corporations, a core of just 1,818 companies controlled most of the global economy. And from within that, an elite 147 companies, including firms like BlackRock, Vanguard, and JP Morgan, controlled nearly 40% of global corporate wealth. These companies are interconnected through complex ownership structures, forming a super entity that essentially acts as a financial cartel. This network isn't a conspiracy, it's a mathematical reality. But wealth isn't their only weapon. They also control information. Major financial entities hold significant stakes in mainstream media outlets. Vanguard and BlackRock have investment ties to platforms like CNN, Fox News, and even Bloomberg. This means the narratives pushed out, market crashes, economic booms, investor panic, are often strategically framed. So while you're reacting to headlines, someone else is profiting from your reaction. Let's talk speed, specifically algorithmic trading. Today, up to 80% of all trading is handled by high-frequency algorithms. These machines can buy and sell millions of dollars worth of assets in microseconds, well before any human can react. According to Oxford's recent financial studies, this system unfairly benefits institutional investors and often punishes retail traders. Why? Because the game is rigged to favor those who write the code, not those who follow the news. Behind the formal banking system lies something even darker: the shadow banking network, a complex system of unregulated entities controlling trillions of dollars. Oxford's research shows that this unmonitored system is the true playground of the elite. No central bank oversight, no transparency, and yet it directly influences everything from interest rates to inflation. These are the pipelines through which silent economic warfare is waged.
And then comes the big play. Political influence. Oxford and LSE studies show alarming overlaps between corporate boardrooms and government policy advisors. Many central banks, yes, even the Fed, have strong ties to the very firms they're supposed to regulate. This creates a global echo chamber where decisions about money, wars, and markets all trace back to the same players. Markets rise, markets crash, but someone always wins.
Whom should you trust, the market or its master? Who really holds the remote control of the global economy? The question sounds simple, but the answer is deep and alarming. According to the 2023 UBS Global Wealth Report, the top 1% of the world's wealthiest individuals now control 462% of total global wealth, up from 458% in 2022. This extreme concentration of wealth raises serious concerns about global economic inequality and social justice. Among this elite group, the most influential institutions are BlackRock, Vanguard, and State Street. Together, these three giants manage around $26 trillion in assets, giving them unparalleled influence over global markets. They collectively own stakes in thousands of companies and invest heavily in each other, weaving an invisible web of control over the market movements. Their influence extends beyond finance into media and public sentiment. Through sophisticated media algorithms, they can manipulate public emotions using fear or hope to steer markets to their advantage. For example, in 2024, stocks like Vistra and Constellation Energy surged by 259% and 144% respectively, largely driven by the investment moves of giants like BlackRock and Vanguard. This growing dominance has raised regulatory concerns too. In early 2025, the U.S. Federal Deposit Insurance Corporation (FDIC) launched an investigation into BlackRock and Vanguard's holdings, as these firms owned more than 10% stakes in several banks, raising alarms about their hidden control over key financial institutions. The real question remains, are you playing the game or simply being played? Now is the time to stay informed, make data-driven decisions, and protect yourself from the unseen influence of the global elite. GlobalMoneyGames. Dark truths behind economic shocks. The stock market is shaking, but it is not just a temporary blip. It is a catastrophic disaster, years in the making. A global scheme of deceit, lies, and manipulation has been slowly unfolding behind the scenes, led by the US, China, and the European Union. The world's most powerful nations have been playing a deadly financial game, inflating stock values, hiding debts, and manipulating the markets. They have done all this while pretending to serve the public interest. But now the truth is breaking through, and the global economy is teetering on the edge of total collapse. Nothing can hide the coming disaster anymore. The illusions are falling apart, and reality is hitting harder than ever before. Governments and global elites have been playing with the world's future like pawns on a chessboard, and the IMF has been a silent, willing accomplice to their manipulation. The organizations people trusted have turned into weapons against them, and the betrayal runs deeper than anyone could have imagined. The reality is our global financial system crumbling. This is no longer just a financial crisis. It is a political conspiracy of unimaginable proportions. The IMF and the world's most powerful elites have orchestrated this chaos, and what is about to happen will shake the very foundations of democracy and the free market. Citizens will watch their savings evaporate. Markets will plunge into chaos. Jobs will disappear. Currencies will collapse. And global supply chains will break down. The trust that once held nations together will crumble. And the world will descend into a new era of fear and uncertainty. The elites are already preparing. They are securing their assets, building hidden shelters, and isolating themselves from the coming storm, while ordinary people remain unaware, trapped in a system that is about to collapse under the weight of its own corruption and lies. While the world watches stock markets rise and fall, few ask who truly benefits. Behind every crisis, behind every panic, lies a deeper strategy. Central banks and mega investors may move first, but there is a silent force that follows with money and rules: the IMF. While nations struggle under debt, the IMF steps in not just with help, but with conditions rules that reshape entire economies, often favoring global financial interests while appearing neutral. They pick winners and losers behind the loans. Lies an invisible hand shaping the fate of nations. In reality, the IMF has bound many nations in chains of economic dependency, seen clearly in Sri Lanka, where debt-driven pressure pushed the country to the brink of collapse, or in the 1997 Asian financial crisis, where Thailand and Indonesia were forced to submit under harsh conditions. Behind this so-called assistance lies a calculated political agenda by global powers using finance as a tool to influence, and in some cases quietly dismantle national sovereignty. Now is the time to strip away the mask and confront the true face of this invisible force. Oxford Economics' recent study reveals that global debt has now exceeded $305 trillion, accounting for more than 340% of the world's GDP. Researchers warn, this is not just an economic statistic, it is a ticking time bomb. Countries have become overly dependent on borrowing to drive growth, but the cost is clear: reduced investments in infrastructure, healthcare, and education. Oxford experts warn that if corrective measures aren't taken immediately, future generations will bear the heavy consequences of today's reckless debt buildup. Oxford Development Studies highlights that the IMF is making secret deals with developing countries, forcing them into economic policies that weaken their economies. These deals often require currency devaluation, heavy taxation, and deep cuts in public services. Sri Lanka and many African countries are already facing severe consequences. According to Oxford's findings, these hidden conditions are increasing global inequality and instability, leading the world toward greater economic polarization. According to Oxford, in 2025, the global economy remains relatively stable, though there have been some notable changes compared to the previous year. Global GDP growth has slightly increased from 32% in 2024 to 33% in 2025. Still below the 2000 to 2019 average, growth in developing economies remains around 4%, which is weaker than in previous decades and insufficient for significant poverty reduction. Inflation across G20 countries has remained stable at 38%, the same as the previous year. Commodity prices are expected to fall by 12% in 2025 and another 5% in 2026, bringing them back to pre-COVID-19 levels. The rise in U.S. tariffs has sparked concerns of a trade war, creating uncertainty in global trade and negatively affecting growth and inflation in the Eurozone. In the UK, the FTSE 100 stock market index maintained a 12-day gain streak in April, but experienced some losses toward the end of the month. HSBC has warned of rising bad loans due to the impact of increased tariffs. Cities like Oxford are experiencing direct or indirect effects of these global trends, particularly in employment, investment, and the overall economic climate. Oxford's said business school experts predict that the next global financial crisis could be the most devastating in history. The combination of extreme debt stock market volatility and IMF-driven austerity policies is creating a perfect storm. Developing nations and ordinary citizens will suffer the most. Oxford's research stresses that urgent coordinated action is required, or the world could be facing an unstoppable financial disaster. According to Oxford's said business school, the global stock market could soon face a crash of over 20%. Tech giants and the banking sector are most vulnerable. Investor confidence is weakening, and high interest rates are accelerating market instability. This upcoming storm is not a normal market fluctuation. It could trigger a crisis even more severe than 2008. Oxford's warning is clear: without immediate intervention, a financial disaster could be inevitable.